Hello, today is Tuesday, August 4th, 2026. Here is your daily signal. Starting with the energy sector, according to Fortune, Chevron has posted its largest quarterly profit ever while Exxon's income also surged, as the ongoing Iran war and conflict in the Strait of Hormuz have squeezed global oil supply and fueled price spikes. Since mid-2026, these geopolitical tensions have critically disrupted oil shipment routes, with the Strait of Hormuz a passage for nearly 20% of global oil becoming a flashpoint amid military activity. Major oil companies have responded to these supply shortages by capitalizing on price volatility, particularly since July, and global consumers, especially the transportation sector, are feeling the impact through sharply rising retail gasoline prices. Chevron's profit nearly quadrupled, and drivers in the U.S. are now paying about $4 per gallon, with oil prices hovering above $85 per barrel. As instability continues, Congress is considering windfall tax legislation targeting record oil company profits, which could affect share prices and reduce corporate earnings. These developments suggest persistent inflation risks, further stress on household budgets, and potential slowdowns in automotive industry growth as elevated oil prices become the new norm. Next, shifting focus to India, Bloomberg reports that major Indian companies are planning fresh price hikes, as consumer prices climbed above the Reserve Bank of India's 4% inflation target for the first time in nearly a year and a half. The surge, driven by rising food and fuel costs, has been especially pronounced in essential items like vegetables, cereals, and energy products, with the Reserve Bank aiming to maintain price stability and economic certainty. The RBI, led by Governor Shakti Das, has left its policy rate unchanged even as inflationary pressures mount, and consumer brands such as Hindustan Unilever and ITC Limited are now considering further price increases. This corporate response risks prolonging inflation and reducing consumer demand, especially among India's low and middle-income households. In the near term, sequential company price hikes could erode purchasing power and slow retail sales. Longer term, persistent inflation may force the RBI into tighter monetary policy, raising borrowing costs and affecting business investment. Food and energy shocks could also heighten social and political tensions if inflation stays above target for several quarters, potentially sparking an inflationary spiral across the economy. Finally, looking at technology and industry value, Next Big Future analyzes how the rise of open-source AI, with models like DeepSeek, is transforming knowledge-based businesses by making high-performing AI solutions freely accessible. These advances challenge the traditional value of paid AI and consulting services. DeepSeek and other open-source models are reportedly indistinguishable from commercial offerings for up to 95% of queries. The abundance of free, high-quality AI tools means that consulting, analytics, and research firms must rethink their monetization strategies, as basic knowledge services risk becoming as undervalued as tap water once they are widely available. According to analyst Jason and publisher Brian Wang, revenue erosion is expected in the near term as clients increasingly choose open-source options, forcing platforms to pivot toward niche specializations and proprietary enterprise services. Medium term, industry players may reinvent offerings with customized, exclusive insights just to retain value, while democratized access to knowledge could simultaneously devalue established expertise and traditional consulting models. Now, onto the markets. European international markets showed modest gains, with Germany up 1.2% and France up nearly 1%, while the United Kingdom slipped by 0.4%, pulled lower despite strong showings from Italy and Spain. Notably, China large-cap stocks held nearly flat, but with a 12% monthly surge, and India rose about 0.7% overnight. Commodities saw mixed action as gold closed little changed at $371. While U.S. oil dropped 5.5% despite a sharp monthly increase. Agriculture was in focus, with corn climbing almost 1.6% and wheat up nearly 1.9%, making them top commodity gainers, while platinum softened by 1.3%. In sector moves, the S&P 500 advanced 1.4%, led by strong performance in semiconductors, as Microsoft jumped nearly 5% and Nvidia gained 2.9%, while Apple slipped by 1.7%. Financials edged higher, real estate posted a modest gain, and clean energy rebounded 2.4% after recent declines. Among individual equities, Reader Logtech Holdings soared nearly 268%, Hydrofarm Holdings was up 230%, and Rocket Pharmaceuticals warrants surged by 129%. The day's sharpest loss came from Agriculture and Natural Solutions acquisition warrants, which plunged almost 98%, followed by steep declines in Inno Holdings and PN Smart Energy, each off more than 49%. That's it for today. You can find more news and details on our website. Goodbye.